This is Eric Mwather with Mwather.com for the week of November the 27th, 2011. After what was a huge down week on the Thanksgiving week, we saw the market, as far as the Dow is concerned, market was down close to 5%, which what was a straight down days for the entire week. Pretty much, if you stayed short that coming into that week, you had chance to make some decent returns for the week, and if you are long, basically the market caught you flat-footed since we started the week down and stayed down on huge chunks for the rest of the week. So now for the new week, we have to contend with what the market looked like at the conclusion of the second week, I think fourth week of November. But what we see here is if we take a look at some of the developments in the market after a big down week, we see that now the Nasdaq also for the week was down about close to 4%. But what I wanted to point out here on the charts is that now we see that the moving averages, the 10-week moving average and the 33-week moving average are now starting to coil and point downwards. That is something the market is going to have to contend with if it wants to rally. That's a beginning of a development of a bearish signal longer term. Also, we need to watch this level here, which was the lowest weekly close. 2341.84 was the lowest weekly close going back to the month of August. So the market either needs to stay above that, or successfully come and test this level and bounce off that. That would be a buying opportunity. But if it does not hold and breaks down, then we will see markets moving to multi-month, multi-year lows. Remember, one of the world markets has already moved to fresh 52-week lows, and I'll share that at the tail end of the video. So that is opening the possibility for a market consciousness that wants to go down. So let's keep an eye on things like that where other markets are already breaking down. Now, one of the positive scenarios for those of you who would like to look at this market to bounce is we who knows, be developing a head and shoulders formation, inverted head and shoulders formation. If the market was to stay around here and then bounce, then we would have left shoulder there, head, right shoulder, or inverse that, and that would set up for a bounce to the upside. Now that is you'll also see that before the market tanked this recently, we had a shoulder there, a head, and a shoulder, and so that was good enough for the market to trade pretty much down for most of the second half of 2011. And now we have what looks like to be the formation of possibility of another inverted head and shoulders formation. So we'll see how that goes. If that's the case, then the market is set to move higher. If not, and for example, if the market trades in this area here, breaks this line here, then that head and shoulders pattern formation is not going to take place, and we should still look to see this market trade lower. Now, the New York Stock Exchange on a monthly chart, one of the things that we need to watch here on a monthly closing basis is just the fact that if you're bullish, you'd like the market to hold that level, which is the lowest monthly close in August, right there. And if you're bearish, you'd like the market to break below monthly closing lows going back about 2 months ago. So we either hold those levels or we break down. Right now, with the momentum being to the downside, it's going to take some strong market bounce to undo the work it did recently with the last 4, 5, 6 days straight down days. Now take a look at the S&P 500. This drop began, and like we talked about a couple weeks ago, is as we broke down this trend line here. Once that trend line was broken, the possibility of the market going down became very large, and that's exactly what took place. A broken trend line, which also corresponded with a break of the RSI support line right here. Oops. So once we could not hold that line that connects those lows there, once that line was broken, you see that the market's been on a straight down leg as expected from a technical perspective. Now, if you take a look at the And this is what the market, take a look at the networking index as just one sector of the market that to me has already broken down. You see it's already below weekly closing lows. So that tells me that it's not going to be a surprise if you see the market over time, not necessarily day to day, but over weeks and months, break the lows it made in October, just because we are seeing some tech sectors already breaking down below former weekly closing levels. So that is a scenario where I think the market still is going to be under pressure. If you take a look at crude oil, we spoke about this on the last weekend analysis video. Taking this line, the gray line that connects the lows of early 2009, lows of 2010 summer, and lows sometime in July or late June, to a straight line. So we broke down, and we've over the last couple, I would say, weeks in crude oil, came and hit that level, and exactly on cue, just like we've spoken about. I suspect that would be an area of resistance, and we see the market now pulling back. That to me tells me that we've seen the highs in crude oil short term. And you'll see the same scenario if you take a look at crude oil on this red line here that connects the lows there and there and there. So basically what we've done is we've worked our way back to the underside of the red line and are now coiling down. That to me is, again, signaling what the price is telling us here, that even the crude oil market might have seen short-term highs, unless and only unless crude oil breaks out on a weekly basis above 100. Should crude oil move above 100 on a weekly basis, then that's going to suggest it's going to recapture that area, and maybe it's going to be pressing higher. So right now, that's a possibility, because as we can see here, we have the moving averages coiling higher, and that might suggest momentum is going to continue to the upside. But the way we're going to know is if we get a breakout in crude oil above 100. That's going to suggest a renewed bullish breakout.